Am I on? Joey? What? Am I on? Yeah. Thank you. Good afternoon, everybody. Welcome to Midday Market Activity or Action. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Glad to have you here. Glad to be here. And it is Fed Day, the Fed Decision Day. I'm looking at the wires right now to see. There we go. The Fed hikes by a quarter point. Let me go bring that up real quick as we see. There it is. The Fed hikes the rates by a quarter point as expected. So live as it happens. Let's go see what that does for the market. I got the market timing graph on. Intraday, there it is. Nice bump right after the news. But you know something? You got to give it a little bit of time because the market reacts one way right after the announcement. And then we go and, right now we're getting ready for a roller coaster ride. Okay. Right now we're getting ready for a roller coaster ride. By the way, if you can hear me, I need the chat, please, Joey. If you can hear me, let me know in the chat that I am coming across loud and clear. There it is. And let's go get it. Because I hadn't even seen that. Let me stretch this out a little bit and clear the chat. Hold on. There you guys are. There you guys. All right, I can see it. Why is the stock market plummeting so bad? So let me scroll that up a little bit. What is that? How did I get that? Yeah. Still didn't. That's great. Let me go highlight that chat. Why is the stock market plummeting so bad? Should I sell everything? As I do, everything will skyrocket. You realize that, right? So Debbie, the biggest thing that I can tell you, I can tell anybody, is that you should have stops on your stocks. If I go right back to the home page, going right back to the home page, what's the majority of the color you see in our color guard? Yellow. What does that mean, Debbie? If nothing else, you should be having tighter stops or watching your stocks. Nothing is telling you to go sell everything. So tighten the stops. Don't be afraid to take half off the table if you've got some gains and hold on to the other half. Nothing is telling you to go sell everything. As a matter of fact, for the last 2 days, the primary wave is still up. So the market is still moving higher week over week. But no, I'm not telling you to go sell everything at all. All you have to do is make sure you have your stops tighten. You remind me of Duke Wayne, partner. Thank you, JR. I like that. That's kind of cool. That's kind of cool. All right. David says, Glenn, you sound good. You're coming through just fine. Hello, fellow Cafe Bustelo drinkers. That's right. We got some Cafe Bustelo. I love that stuff. All right. Let's go see. We got 300 people today. That's good. Let's go see if we get 400 people today. We always pull in a lot of people when the Fed is getting ready to do an announcement, because I always like to make sure that we can watch it live. At 2:30, he will have a conference. I've got the website open for that. We'll listen to what the Fed is saying. Let's go see what the talk is. Is it hawkish talk? Is it more dovish talk? And he'll answer questions. So we'll watch that together. But as we see at the 2 o'clock, where the announcement came in right at 2 o'clock, I see us pulling back a little bit. And we'll see. All I'm telling you is not everybody to go and panic. And I like that, Drew. Thank you. Drew says, at Debbie, suggest you read the color guard report nightly. It really helps. Good afternoon, Oris. Glad you're here. All right. So no, I'm not telling you to sell. And a lot of times, Debbie, we try to outguess the market. If the market's not telling you to sell, then you're not selling. But with all of the yellow, you see all of the caution, that means slow down. All right, so immediate reaction, the market's pulled back a little bit, and I'm of the mindset, what if he paused right now? Would that be enough of a catalyst to move the market into a rally mode? I don't think so, but again, that's my insight. I'm not the Fed. I cannot tell you what he is going to do. All I'm telling you is that as VectorVest and as the guidance we give, we let you stay on the right side of the market. Let's see the final nail in the coffin at 50 basis points. I think he should have done 100 basis points way before now. That was my opinion a long time ago. The algos will be hard at work for the first few minutes. And Chris, you ain't about joking. All right, as we continue to watch the market, you ain't about joking. But let's do this. Let's see what other news is moving the market. I'm going to go find, there we go. Let's go see what other news is moving the market. And starting off here's a story from the Wall Street Journal that is online with the pause thing. Fed should pause rate increases after this week, former vice chair says. All right, I am of the mindset, though, I don't think he's ready to do that just quite yet until he can get inflation down to 2. Now, I understand that the raising of the interest rates is a laggard indicator. Inflation is coming down from 9 to 5. All right, working 9 to 5. What a way to make a living. But it's down from 9. It's down from 9 down to 5. His goal is to get it at 2. If his goal is to get it at 2, I don't think he can pause just quite yet. He's got to act. He does not want inflation rearing its ugly head. So now, along with that, private payrolls surged 296,000 in April, much higher than expected. That's a problem for the Fed. These are the things that are keeping the Fed more hawkish in the market and not ready to pause just quite yet. How about this? Half of America's banks are potentially insolvent. Now, I didn't read the full story. I'm looking at the headlines. This is how a credit crunch begins. How many of you have seen the video that I did on are we getting ready for a credit crisis? Type a 1 in the room. All right, I just did a video on are we getting ready for a credit crisis? I type a 1 in the room if you've seen that. Folks, we try very hard to stay on top of what things are prevalent in the market. John says, Aid in the house. Glenn, nice outfit. Lisa's not here. I don't think she's here, but I hadn't seen her, so she might. All right. That video is going right along to what this story is about. And for anyone who's saying no, I invite you to go take a look at that video. John says, more banks to fail. Yes, I've been saying for a minute that I'm still waiting for the other shoe to fall when it comes down to the banks. All right. So I'm going to keep on moving on. Here's a story. Let's close that out. Unity Software to lay off 600 employees or 8% of its workforce. Earnings is going, I said this late last year that earnings was going to play a major role in this whole idea of whether or not we're in a recession and the effects of the rising interest rates on the market. All right. We've seen over and over again that more and more companies are laying off people. The story that I just did last night, or the video that I just did last night about are we ready for a market correction? Think of it this way. As many people are getting laid off, they're needing to hold on to their money until they find another job. What are they doing? They're taking the money out of the market that they did have in the market. I think the layoffs play a major role in the idea of if we are ready for a market correction. That's one of the things that I just talked about in that video. Sonny says, just got my notification, better late than never. I'm glad you're here. Francisco says they should slow or stop government spending. Absolutely. But that's the right thing to do, Francisco. And no matter what side of the aisle that you're sitting on, the last 5 presidents have raised the debt tremendously. Each one. And at some point in time, putting the money back into the economy by way of quantitative easing is a way to get into a hot economy. But over time, what does a hot economy, what is it going to cause? Inflation. There's no way of getting around it. All right. As people are getting more money, prices will increase. That is inflation. But now when you go back to try to go after inflation, people are in a situation where their stories have come out that people who make $100,000 or more a year are still living paycheck to paycheck. That's tough. The S&P gains slightly after the Fed raises the rates, but signals possible pause. All right. That's what we're going to hear at 10:30. I've got that set up for us. That's what we're going to hear at 2:30. Is the Fed going to start sounding a little bit more dovish to see if the interest rates hikes that he's done over the past year or so Are they working, and is it cooling off inflation enough? Signals a possible pause. We'll see. So let's go put Unity software, which is your U, into the system. Let's go to the Viewers tab. Here's the indices right now. All of the major indices are up right now. Looks like the VectorVest Composite is up the most. Actually, no, the Russell. People are greedy in the market today with the news. The Russell 2000, the low cap stocks are on the rise, up 1.5%. People are greedy. They're taking advantage of the low capitalization to make some money. Very interesting. So they're not fearing. There's no fear in the market right now. Well, the VIX is below 20, even though it's risen a little bit. But people are jumping on the low dollar stocks. Let's go put in Unity. I'm going to build this watch list as we go through the stories. There's Unity software. It beat on earnings. Let's keep our eyes on it. It is overvalued. Ooh, fundamentally not sound. All right. It's not in an uptrend. Even though it beat earnings growth rate at 33%. I'm not feeling that, and it's a sell recommendation. All right, let's go to the next story. CVS beats on earnings and revenue, but lowers profit outlook. Because of the rising interest rates, a lot of companies are guiding lower going into the next year. All right, let's go take a look at CVS in my watch list. CVS. Let's go see what's going on with it. The beautiful thing is, as we build this watch list, the stocks with the highest combination of value, safety, and timing will automatically migrate to the top of the list. So CVS beats. It is undervalued. It's got favorable upside with relative value above 1. Relative safety is below 1. The stock's in a downtrend, and they only grow their earnings at a clip of 8% a year. There's a lot of competition out there. You got Walgreens, you got Walmart, all of these companies that do offer the health and wellness. He's got competition, so I guess it's a tough space to grow earnings. But they did beat earnings, but they guided lower. All right, Apple. Apple's ready to report tomorrow. Interesting story. So I know a lot of you have heard about the Apple savings. All right, Apple reportedly attracted $1 billion in deposits into its high yield savings account in 4 years. You know something? It's almost like everything Apple touches turns to gold. Everything Apple touches turns to gold. Mash says the primary wave has been volatile lately. Being mashed that it is the fastest, most aggressive signal, it will be the most volatile of the market timing calls. Ayad says my 401k has become a 201k with a lowercase k. Folks, if you are a subscriber to the VectorVest software, I think, and let me ask this question. How many of you, as a VectorVest subscriber, let me ask it from them. How many of you are positive for the year? Type of 1. If you're not positive for the year, type of 2. I'm specifically asking VectorVest subscribers. If you're up for the year, type of 1. If you're not up for the year, type of 2. I'm doing this for a couple of reasons. One, I want the chat to see what real VectorVest subscribers are all doing. And number 2, for those people who are not subscribers, I'd rather you hear from them than to hear from me as the company guy. I see the 2s, but I see a lot more 1s. I see a lot more 1s. And for the people who are typing in 2, I'm always going to say, do you follow the guidance? Do you follow the guidance, or do you go off on your own thinking that you can do better than us? And if you can and you do, outstanding, do it. But I think that for the most part, if you can follow the guidance and stay with us on the trends that we put out, I think you almost, all right, I think that you almost have to be at least up for the year. All right. And now I'm the company guy saying that. I am still up for the year. I'm lower than I was earlier in the year, but right now I am still up about 7% on the year. All right. Thank you for that, Team Nasiver. Says your presentations are value added, Glenn, and I appreciate that. I do appreciate that. A Fox says you're up 35% a year. A Fox, are you a subscriber to the VectorVest software? Remember, I ask the question to my VectorVest subscribers. And if you are a subscriber and you're up 35% a year, man, bada boom, bada bing, gotta love that. Gotta give you an applause on that. Got to give you a pause on that. It's mostly helps not to suffer big drawdowns, but could be better. Nice job on your market correction video yesterday, Glenn. Thank you for that, Corey. I do appreciate that. I am new, but I see the value, and I've only recently on the past last uptrend gotten into the market. Way to go, Roy. Thank you for that as well. All right. So again, I did that for two reasons. One, I wanted to see how many people would be honest and let me know that they were or were not making money. And number two, for those people who are not subscribers to the VectorVest software, I wanted you to hear from them as well. So this is a couple of things. A lot of money, man, Apple just makes money hand over fist. And they start to report tomorrow. So I'm going to go back. Let's go put Apple into the list. Bada boom, bada bing. Where does it fall? Of course, I thought it would go up to the top, and it did. All right, so Apple, grossly overvalued though. A lot of people, there's a lot of perception that Apple's a good stock. They're putting the money into the stock is grossly overvalued. That means that people are willing to pay a premium to own Apple. Dave says, "Hey, Fox, are you a day trader?" It's up to him to answer that question. John says, "It's really hard to be up a lot this year going long when the buy to sell ratio has been so low." But think about it. The buy to sell ratio has been low. Let me go to the graphs real quick. The buy to sell ratio has been low, but I want you to see something. Notice that when the market, let's go to buy to sell ratio, change the style. I want you to see something. And this is guidance. Notice where the market was going up here. Notice that. What was the buy to sell ratio doing? It never got above 1. It never showed that the stocks that were moving up got to be buy recommendations. This adds to the reason why I called this move irrational exuberance. Does that make sense to everybody out there? Yes or no? Look at this move from this low up to these levels of resistance. But look at this indicator, the buy to sell ratio, which only you can find in the VectorVest software. It never confirmed that stocks getting a buy recommendation was going on. Stocks weren't really taking advantage of the rally. Where else do you get an indicator that gives you that kind of information? Thus the reason, irrational exuberance, that people wanted to push the market in that the blah, 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 blah. But a system like this was telling you, not so fast, my friend. This system was telling you what? The rest of the story. All right, so just keep that in mind. Again, that is something that I want my people who are not subscribers to the VectorVest software to see. And guess what? You can take advantage. You can take advantage of the power behind this system for 99 cents. 99 cents. Go to www.vectorvest.com/YT, which stands for YouTube. You can take advantage of this power for 99 cents for 30 days. And then if you want to keep it afterwards, you can. If you don't want to keep it, you don't have to. Call signals, confirm down, primary wave, do up and down, BLB, RT, kicker comment, very confusing. Oh, no. Sal. So you need to know what kind of investor you are. Do you consider yourself an aggressive trader, more of a prudent investor, a swing trader, or more of a longer term investor in the market? Based upon your answer, I can help to tune you into one of the market timing signals. We've got 7. That doesn't mean that you need to use all 7. If you know the type of investor you are, choose one and trade off of one. Does that make sense, Sal P? Those signals are not designed for you to go and use them all. All right, swing trader, which do you use? The DEW. All right, signal becomes valid at the end of the day. Absolutely. I don't know where that question came up from, but Sal, if you say maybe, then that in in turn tells me that you probably don't have a trading plan set up, because based upon your trading plan, you would know the type of investor you are. You need to know when to buy, when to sell. That's your trading plan. If you don't know when to buy because you don't have a market timing signal, then your trading plan is not able to be put into action. You need to know when to buy, what to buy, and when to sell. Hi, Ravi. All right, so Sal, you need to know the type of investor you are, and based on that, you can choose a market timing signal, choose a search to find stocks for them, and based upon your risk tolerance, choose what stops you want to use to get out. All right, we got 10 minutes before the Fed goes into his conference. All right, what other stocks do I have for you? Oil. Oil prices skid to the lowest level since March. Traders brace for recession. How many of you out there are trading either trading, let's start with oil. How many of you are trading oil right now? I am not. I am not trading oil right now. But I'm going to put that into my watch list. I'm going to put up USO. All right, USO for oil. Let's go see where it's number 2 in the list. Harry says UP up for the year thanks to fixed TO and SMCI are rocking, which I would never have known without VectorVest. All right. A Fox says he's got XOM. I'll add that to the list for oil. I can do that. I'll add XOM, and I will add, GDX is a gold play. I'm not ready for that yet. Let's go look at MRO. Now, if I look at the oil plays into the watch list that I'm building, you'll notice that XOM comes to the top of the list. So AFOX was up 35% for the year. Nice looking play right here. Even though I think oil is a tough place to be, Mobil, ExxonMobil, look at that. Undervalued, good upside potential. This stock should still outperform a AAA corporate bond by over 50% over the next 1 to 3 years. Relative safety is flat. It is in an uptrend. They grow their earnings at a clip of 27%. You can't beat that either. XOM may not be a bad play, even though I'm not hot and heavy on oil right now. ExxonMobil may not be a bad play. I'm looking at Marathon Oil, undervalued, good upside potential. Not as good as Exxon, but still good nonetheless. And they grow their earnings at a clip of 31%. U.S. Oil, which is the ETF, not in an uptrend. So relative value, relative safety will be at 1. It's not in an uptrend. So if I want to play the whole space, I'd look at USO, but Marathon and Exxon might not be bad plays as well. All right, let's go back to the news. Pfizer will shift focus to dividends and share buybacks. Why are they doing that? Because they're trying to get more people to buy the stock. Why? Because I think everybody is looking at a possible recession coming, and they're trying to make themselves look just as good as they possibly can for investors. Dividends, they give money back to the investors, but the price of the stock drops the price of the dividend. It is what it is. So they're doing what, and why are they doing that? Because of the missed out money now, or lost money on COVID. They're not selling near as much as COVID vaccines. So that's hurting them adversely. All right. About 7 minutes before the Fed comes on. So let's go put Pfizer into our list. All right. So these are my hot news stocks, big news. Let's put in PFE. Let's go see where it sits. So as we looked at all of these, I'm still not an oil player, but looks like the oil stocks in the list by VST are the stocks you want to keep your eyes on. Where is Pfizer? Pfizer's right in the middle of the list. All right, slightly over, I'm going to call that fairly valued. Upside potential not there. The safety is there. The company's been around a long time. But it's interesting, as big as a company as Pfizer is, and probably with all of the stocks or all of the drugs they have in the pipeline, look at that, earnings growth of only 1%. Give me another, let's go look at mRNA. All right, Moderna in the same spot. Look at that, growing negative. What else is in that space? Pfizer is not an ethical stock. Now, hold on. Give me another Merck. Let's go look at MRK. Trying to look at them as well. Look at that. Went to the top of the list, undervalued, and they grow their earnings at a clip of 11%. So if I'm looking at, so when it says ethical, where is Pfizer is ethical? Merck is ethical as well. Merck is ethical, and you're right that what was the Moderna was not. I'm going to take that off the list. I'm going to delete that. So if I want to look at ethical to ethical, Merck is a better play. GlaxoSmithKline, GSK, that's another one, GSK. I believe that's in the ethical space as well. I'm getting ready to find out. I think that it is. Yep, it is. So, interesting that we talk about Pfizer. I also wanted to talk about possible companies that were better than Pfizer, and Merck really tells me that right there. Merck really tells me that right there. All right. REGN, Regeneron, REGN, is that ethical? If it's not, I'm going to take it off the list. I want to compare apples to apples. Regeneron is drug biomedical. Nope. It's not ethical. I want to compare apples to apples, so I'm going to take that off. So even though Pfizer made the news and we're looking at it, I like the idea of looking at other companies in this space that could be better plays. Merck is. And Merck, out of all of them, Pfizer, fairly valued. Glaxo is undervalued, and so is Merck. But I like that Merck grows their earnings at a clip of 11%, and GlaxoSmithKline grows their earnings at a clip of 14%. All right, so Sold Lilly made a quick 12% with Glenn's recommendations a few weeks ago. It wasn't mine. Listen, none of these are my suggestions. They all come from the software. None of these are my suggestions. They all come from the software, and learning how to effectively use the software is what it's all about. So as we looked at all of the big news that came out, we slowly but surely built a watch list, and even came up with some stocks that did not make the news that could be possible good plays going forward. This is not something that I normally do. I already have these built for you. How many of you like this format that I just did? Type of 1. I like the idea of looking at the stories and then coming to the system, the VectorVest system, to put them and slowly build this watch list. How many of you like that technique that I just did today? It's new, but I want to know, do I still have TSLQ? The answer to your question is yes, I do. As a matter of fact, I don't have my brokerage open right now. But yes, I still do have TSLQ. I still own TSLQ. Chris says, new highs in the market for the day. Guess we'll see if Powell can push it down. All right, so it looks like you guys like it. I think going forward, as we go through my live streams, I think I'm going to build the watch list of the big stories as we go through that. Glenn, using the desktop, can we see your live watch list you are adding to? I'm not adding to I never add to them on a live stream. So here's all my watch lists that I have, but I don't add to them. I've got watch lists in a group called Glenn, but I'm never adding to them live, Matthew. These are things that I look at to help me to be able to present stuff to you, but it's also stuff that I personally use to invest with as well. All right, so Siberia says, great suggestion, Glenn. You got it. All right, let's get back. We got to all of my stories that I wanted to get through. All right, the stuff that's moving the market along with stuff for the economy. Let's go to watch this live. I'm going to hit the play button, and it's going to start in about a minute. I believe the desktop audio will be turned up so that you can hear what's going on. So hopefully I got this all set up right. I did it on my own. All right, and we'll see. By there it is. Waiting. We're waiting. So hopefully once it comes on, you guys will be able to hear. This stuff really works. Thank you, Jake. I appreciate that. This stuff really works. So this is where, and I'm going to take notes. I want to take some notes to see what he says. But this is where the rubber meets the road. Before he comes on, let's go back to the graphs. What's the market doing? Put this back on the intraday. Oops, where was it? End of day, intraday, 1 minute bars, current day. There we go. So that was the 2 o'clock hour, somewhere up in here. 2:12. Let's go to 2 o'clock. Just to get us a standpoint of where he was. Where were we when the announcement came out, and where we are right now. All right. Let's go see if I can get to this. It's waiting. We're sitting right at 2:30, and I'm just waiting for him to come on. It looks like it says waiting for the PBS hour, news hour to kick off. All right. Let me hit the refresh just to be on the safe side. All right. Hit that. It still says waiting. All right. We'll wait for it to come on. The Nightbot gives the risk-free 30-day trial. For those of you, again, who are not subscribers to the VectorVest software, we do give you access for 99 cents for 30 days. 99. And I tried very hard in the live streams to show you a lot of the potential behind the system, at least to give you some idea of what you could have at your fingertips. And we'll go from the Jake. There it is. All right, let me turn this up. We'll let Joey turn it up. Tell me if you can hear it. Yes or no?
We will continue to monitor conditions in the sector. We're committed to learning the right lessons from this episode.
Can you hear? Yes or no, folks? No.
As a first step in that process, last week,
how about now?
Vice Chair for Supervision Barr's review of the Federal Reserve's supervision and regulation of Silicon Valley Bank. The review's findings underscore the need to address our rules and supervisory practices to make for a stronger and more resilient banking system.
Okay, now you can hear it. Good.
We will do so.
All right.
From the perspective of monetary policy, our focus remains squarely on our dual mandate to promote maximum employment and stable prices for the American people. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by a 1/4 percentage point. Since early last year, we've raised interest rates by a total of 5 percentage points in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are also continuing to reduce our securities holdings. Looking ahead, we'll take a data-dependent approach in determining the extent to which additional policy firming may be appropriate. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. The pace of economic growth in the first quarter of this year continued to be modest at 1.1%, despite a pickup in consumer spending. Activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the first 3 months of the year, job gains averaged 345,000 jobs per month. The unemployment rate remained very low in March at 3.5%. Even so, there are some signs that supply and demand in the labor market are coming back into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years.
Taking notes.
Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. But overall, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in March, total PCE prices rose 4.2%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses.
All right. I just lost volume. That was interesting.
And we're continuing the process of significantly reducing our securities holdings. With today's action, we have raised interest rates by 5 percentage points in a little more than a year. We are seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In addition, the economy is likely to face further headwinds from tighter credit conditions. Credit conditions had already been tightening over the past year or so in response to our policy actions and a softer economic outlook. But the strains that emerged in the banking sector in early March appear to be resulting in even tighter credit conditions for households and businesses. In turn, these tighter credit conditions are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of these uncertain headwinds, along with monetary policy restraint we've put in place,
Usually
our
Monday,
future
Corey.
policy actions will depend on how events unfold. In determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take the cumulative the lags with which monetary policy affects economic activity and economic and financial developments. We will make that determination meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation.
Look at that market, baby.
But we are
Woo!
prepared to do more if greater monetary policy restraint is warranted. We remain committed to bringing
Somebody
inflation
needs to bring
back
him
down
some
to our
water
2% goal
or give him a
and
mint.
to keep our longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, here come the questions. You guys want to watch the questions for a little bit? Yes or no? You guys want to watch the questions? Yes or no?
Thanks for taking our questions. I wonder if you could tell us whether we should read the statement today as a suggestion that the committee is prepared to pause interest rate increases in June. And I also wonder if the Fed
got
staff
a lot
has
more
in any way
yeses.
revised their forecast for a mild recession from the March minutes. And if so, what a recession like what they're envisioning would look and feel like
So
when it comes
this
to, for
is
example,
a
the
question
unemployment
about pausing. Let's listen.
So, taking your question, of course, today our decision was to raise the federal funds rate by 25 basis points. A decision on a pause was not made today. You will have noticed that in the statement from March, we had a sentence that said the committee anticipates that some additional policy firming may be appropriate. That sentence is not in the statement anymore. We took that out, and instead we're saying that in determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account certain factors. So that's a meaningful change that we're no longer saying that we anticipate. And so we'll be driven by incoming data, meeting by meeting, and we'll approach that question at the June meeting.
So did he answer the question about a pause?
So did
Did he answer it, or did he just walk around it?
So let me start by saying that that's not my own most likely case, which is really that the economy will continue to grow at a modest rate this year. And I think that's, so different people in the committee have different forecasts. That's my own assessment of the most likely path. Staff produces its own forecast, and it's independent of the forecasts of
Kevin
the,
says no
participants,
longer anticipates a
which include the
pause.
governors and
Yes,
the Reserve Bank
so
presidents,
they
of
don't
course.
anticipate
And
a
I think this
pause.
is a healthy thing, that the staff is writing down what they really
Gerda
think.
says
They're
they did not
especially influenced
decide
by
on
what
a
the governors
pause.
think, and vice versa. The governors are not taking what
Jerry
the staff says
says
and just
yes,
writing
he
that
can
down. So
pause
it's
at the
actually
next meeting depending
good
on
that
circumstances.
the staff and individual participants can have different perspectives. So broadly, the forecast was for a mild recession, and by that I would characterize as one in which the rise in unemployment is smaller than has been typical in modern era recessions.
Look at that bump.
I wouldn't want to characterize the staff's forecast for this meeting. We'll leave that to the minutes, but broadly similar to that.
Salt, you are looking at the composite right next to him. That is the composite.
Your questions.
Why does
I'm wondering
that
if you can talk about the account of possible effects of a debt limit standoff. You've said repeatedly that the ceiling must be raised.
Drew
But do
says
you
he's
see any
going to
economics
go
effects
by
of
the
even getting
data,
close to a
but
default?
no
And what type of
anticipated
situation would
hike.
that look like?
So I wouldn't want to speculate specifically, but I will say this. These are fiscal policy matters, for starters, and they're for Congress and the administration, for the elected parts of the government to deal with, and
The
they're
answer is
really
in the market reaction.
consigned to them. From our standpoint, I would just say this. It's essential that the debt ceiling be raised
No
in a timely way
anticipated pause.
so that the U.S. government can pay all of its bills when they're due. A failure to do that would be unprecedented. We'd be in uncharted territory, and the consequences to the U.S. economy would be highly uncertain and could be quite averse.
Catastrophic.
So, I'll just leave it there. We don't give advice to either side. We just would point out that it's very important. That
And
this be
Jerry
done,
is
and
right.
that
They
the
heard
other point I'll
the
make about
change
that,
from
though, is that no one should
anticipating
assume
higher rates in
that
the
the
future.
Fed can protect the economy from the
was the
potential,
bump.
short and long-term effects of a failure to pay our bills on time. It would be so uncertain that it's just as important that we never get to a place where we're actually talking about or even having a situation where the U.S. government's not paying its bills.
And just to follow up, was discussion around the uncertainty of a possible standoff?
Chris says,
did that
I
affect today's
understood
monetary policy
no
decision at all?
I wouldn't say
anticipated
that it
hike.
did.
And it looks like
of course,
the
it's
market
something that
felt
came
the
up.
same
We
way.
talk a lot about risks.
That's why I asked the
to
question.
the outlook, and
Did I
that
miss
will-
it?
That come up. A number of people did raise that as a risk to the outlook. I wouldn't say that it was important in today's monetary policy decision yet.
Oh, thank you, Steve Leisman, CNBC.
Steve Leisman.
Tell us what the Federal Reserve Board did in the wake of that February presentation where you were informed that Silicon Valley Bank and other banks were experiencing interest rate risks. And can you tell me what supervisory actions you've done in the wake of
Look at that. I hate
to make sure that banks are
this
currently
happens.
appropriately managing interest rate risk? And kind of part three, but it's all the same question here.
I don't disagree with
Do you
you,
still
Jerry.
think this separation principle that monetary policy and supervision can be handled with different tools? Thank
Yes,
you.
John. That
Sure.
is
So the
true. That
February
is the key.
14th presentation, I didn't remember it very well, but now, of course, I've gone back and looked at it very carefully. I did remember it, and what it was a general presentation. It was an informational briefing of the whole board, the entire board. I think all members were there, and it was about interest rate risk in the banks and lots of data. And there was one page on Silicon
John,
Valley
you're
Bank,
right.
which talked about
There's the 2 o'clock.
amount of
This is
losses that
crazy.
were, mark-to-market losses they had in their portfolio. There
Big
was
time
nothing in it
crazy.
about, that I recall anyway, about the risk of a bank run. So it was, I think the takeaway was they were going away to do an assessment, a horizontal assessment of banks. It wasn't, it wasn't presented as an urgent or alarming situation. It was presented as an informational, non-decisional kind of a thing. And I thought
Keyword,
it was
Jerry,
a good presentation, and
trading
as I said, did remember
day.
it. In terms of what we're doing, of course, I think banks themselves or many banks are now
There's
are attending
gold.
to liquidity and taking opportunity now, really since the events of early March to build liquidity.
There's gold.
You asked about the separation principle. I like so many things, it's very useful, but ultimately it has its limits. I mean, I think in this
There's
particular
the end
case,
of day
we have
graph.
found that monetary policy tools and the financial stability tools are not in conflict. They're working well together. We've used our financial stability tools to support banks through our lending facilities. And at the same time, we've been able to use our monetary policy tools to foster maximum employment and price stability.
Mr. Chairman, I'm sorry. I don't mean to be argumentative, but the staff
Yes, you do.
report
If you
said
say that, that means you're going to
SVB
be
has
argumentative.
significant interest rate risk. It said interest rate risk measurements failed at SVB, and it said banks with large unrealized losses face significant safety and soundness risk. Why was that not alarming?
Well, I mean, I didn't say it wasn't alarming. It was, they're pointing out something that they're working on and that they're on the case. I'm not sure whether they mentioned, I think they did actually. They
Dave,
mentioned,
David,
that they've
I'd
taken
like for
regulatory
RT to be better
action
than one.
or
Gives me
supervisory
more
action in the form of
confirmation
matters
of a
requiring
move
attention.
to the
So I
upside
think that
on the
was also
stock.
in the presentation. I think it was to say, yes, this is a bank and there are many other banks that
Steve
are experiencing
Leisman does want to
these
debate,
things,
Michael.
And we're on the case.
Go to Victoria.
Hi, Chair Powell. I wanted to ask, obviously,
Oh my
with the
gosh,
recent
she's
bank
loud.
turmoil, we've seen multiple banks buy other banks. And I was just curious whether you think that further consolidation in the banking sector would increase or decrease financial stability, and whether you have any concerns about the biggest bank in the U.S. Getting even larger.
So, we certainly don't, and I don't have an agenda to further consolidate banks. Consolidation has been a factor in the U.S. banking industry really since interstate banking.
John,
Before
I'd
that,
look
it
at
goes back more than 30
tomorrow.
years.
I'd look
When I
at
was
to
in
see
the
what's going on
government
in
a
the
while
market
back, I think there were
tomorrow.
14,000
I
banks.
think
Now there are
today
4,000 and change. So
people
that's-
are listening
that's
and
going on.
responding.
I personally have
Overnight,
long
they'll
felt
have a time to
that having
digest
small, medium,
and
and
look at
large-sized
what's going on in the
banks
market
is
tomorrow,
a great
John.
part of our banking system. The community banks serve particular customers very well. Regional banks serve very important purposes, and the various kinds of GSIBs do as well. So I think it's healthy to have a range of different kinds of banks doing different things. I think that's a positive.
Yes. Apple reports before the
Is it
open.
a financial? So I would just say, in terms of J.P. Morgan buying First Republic, the FDIC really runs the process of closing and selling a closed bank.
Agreed,
Completely.
Drew.
That is their role, so I really don't have a comment on that process. As you know, there's an exception to the deposit cap for a failing bank. So it was legitimate, and I think the FDIC, I believe, is bound by law to take.
I'm going to give this a
bid
few
that
more
is the
minutes,
least
and then we're
cost
going to
bid.
close out for the
So
day
I
for
would
this
assume that's what
session.
they did.
All right? Just a few more minutes.
The fact that they're getting larger in general.
So I think it's probably good policy that we don't want the largest banks doing big acquisitions. That is the policy, and but this is an exception for a failing bank, and I think it's actually a good outcome for the banking system. It also would have been a good outcome for the banking system had one of the regional banks bought this company, and that could have been the outcome. But
This
ultimately,
ain't, yeah, this is a trading day.
we have to follow
not
the
a
law in our
trending
agencies
day.
and the law as it goes to the least cost bid.
Let's go to Colby.
Thank you. Colby Smith with the Financial Times. At the March meeting, you mentioned that a tightening of credit conditions from the recent bank stress could be equal to one or more rate increases. So given developments since then, how has your estimate changed?
Ooh, good question.
Yeah, I think I followed that up by saying it's quite impossible to have a precise estimate of the words to that effect. But in principle, that's the idea. When we've been raising interest rates, and that raises the price of credit, and that, in a sense, restricts credit in the economy working through the price mechanism. And when banks raise their credit standards, that can also make credit tighter in a kind of broadly similar way. It isn't possible to make a kind of
No
clean
problem, Sal.
translation between one and the other, although firms are trying that, and we're trying it. But ultimately, we have to be honest and humble about our ability to make a precise assessment. So it does complicate the task of achieving, a sufficiently restrictive stance. But I think conceptually, though, we think that interest rates, in principle, we won't have to raise rates quite as high as we would have had this not happened. The extent of that is so hard to predict because we don't know how persistent these effects will be. We don't know how large they'll be and how long they'll take to be transmitted. But that's what we'll be watching carefully to find out.
Laugh
Just to
out
quickly
loud,
follow
Bill.
up, what does it suggest about the scope for the committee to pause rate increases perhaps as early as next month, even if the data remains strong then, if it's having some kind of substitute effect?
This is
No,
just something
Salim,
that we have
no
to factor in
way.
as we want to find ourselves. So I guess I would say it this way. The assessment of the extent to which additional policy firming may be appropriate is going to be an ongoing one, meeting by meeting, and we're going to be looking at the factors that I mentioned that are listed in the statement, the obvious factors. That's the way we're going to be thinking about it. That's really all we can do. As I say, it does complicate. We have, a broad understanding of monetary policy. Credit tightening is a different thing. There's a lot of literature on that, but translating it into rate hikes is uncertain. Let's say it adds even further uncertainty. Nonetheless, we'll be able to see what's happening with credit conditions, what's happening with lending. There's a lot of data on that, and we'll factor that into our decision making.
All right. Let me minimize that. Talking about being able to trade these signals, I am going to put us, look at that. And do I have one with the DTI? Yep. There's the DTI. For those of you who wanted to be able to trade the signals today, thank you guys first off for sticking through all of that. The last day trading signal we got was at 11:51 this morning, and it's been up ever since. The DTI, for those of you who are not subscribers to the VectorVest system, we also do have a day trade timing signal called the DTI. It was above our level of 1.2 at 11:51 this morning, and even with all of these gyrations, that signal is still intact. So if you were trading today, day trading today, there we go. All right, the Fed has to become more dovish than the last meeting. That is my assessment. Not really sure market is going to like the answer. Need to wait. John says, if Glenn was the Fed chair, he would be telling everyone to sit down and be quiet. You're darn right. I'd put people in timeout. You think I'd turn this market around? Y'all better sit still. Y'all better. Ooh, you think I wouldn't? You think I wouldn't? Goodness gracious. All right. No pause, and they will keep raising is what I got out of that. I think, and even though we all listen to the same talk, a lot of us got different stuff out of it. How does that happen? I'm curious, how does that happen? I heard something when I asked the question, you guys were on both sides. I don't, how do we hear different answers when we're all listening to the same thing? All right, Mark says, what is this timeout you bring up? Mark, you're in timeout. Here we go. Here you go. You're in timeout. Matthew says, love this. Thank you, Glenn. I'm these are the times that we do this, and I'm glad that we are able to watch the Fed talk and talk through it together. Thank you, Glenn. I really appreciate it. He speaks in subjective terms, says Kevin. 1981, when the annual average was 16%, according to Freddie Mac data. Are we going there again? I don't think so. I don't think that. Michael says it's called Fed speak, open to interpretation depending on your conspiracy theory skills. Wow. That's all I can say about that, Michael, is wow. All righty then. Woo! We have different info to add to his answer, says Uncle Nephew. I got you. I got nothing but about the future of the hikes. I'm not sure I did either. I still think that he's adamant about being at 2% on inflation, and if that's the case, he's gonna have to keep raising interest rates. That whole thing about what he omitted from the last statement, I still don't get all of that. He omitted something about the possibility of raising. I don't know. I'm not sure what that omission did to the overall statement. All right. So, Mark says, I'm enjoying the nuts in this talk show for sure. That would be me. That would so be me. All right. What did you say, Jerry? That was clear as mud. I got you. I need new conspiracy theories. All the ones I have turned out to be true, says Roger. Wow. All right. With that, I want to close out for the day. Thank you guys for joining me. And always, when we have Fed talk, it seems to always fall on our afternoon market action. We got to talk through it. We got to laugh through it. We got to cry through it. We all got different interpretations out of the same. We all heard the same thing, but we all got. Sigh. Why is this on my jacket? We all got different takes on it, which is kind of interesting. That's the way our government is. All right, you know me, I don't like to get into politics, but that's just how government is. They can all say one thing, but everybody takes something else out of it. All right, I'm done. Drew says, good talk show. Thank you, Glenn. Love your video. Thank you, Charles. Thank you guys for being here. I wish he would talk more often. We could dissect his speeches a lot more often. If we could, I would. If we could, I would. All right, with that, folks, this is how we look for the day. Let's go back to the homepage real quick. What's the homepage look like? Still a lot of yellow. All of the major indices are up, but not by a lot. Look at the Dow. Barely up. Who's leading the way? NASDAQ up about 0.8%. The composite is up about 0.8%. Nothing's running gangbuster. Nothing is running gangbuster. John says, awesome. Glenn is talking politics. No, I ain't. I ain't said nothing about politics. Don't be putting them words in my mouth. Don't be doing that. All right, I got to go. I will be live tomorrow for Trending Thursday at 2. I will also be live tomorrow at 10 a.m. for the mobile app coaching. So I'll be live tomorrow twice. All right, 10 o'clock a.m. Eastern time for the mobile app coaching, and then 2 o'clock p.m. Eastern time for Trending Thursday. All right, with that, and Boston said, don't forget. There you go. Can we talk politics tomorrow? No! Look at my eyes. No, we're not talking politics. Thanks, Jerry. Jake, you're in timeout. All right, where's Patrick at Salim? Patrick no longer is employed here at VectorVest. All right, he's no longer here. Okay. What was that Bud Light thing about, Glenn? Why? No, we're not getting into that. I'm leaving. I'm so leaving. This live stream is over. Adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Bom dia. Salam, shalom, namaste, yasu. Until next time, folks. See ya. Joey, are you here? I'm still live.